Welcome to TradeTheMBI.com. This is John. This report is for the 9th, and it was quite a nice little decline there. Let's scroll through some of the numbers from the radar screen. As we can see, we've had a decent mix. A little bit of global turmoil, always popular situation to have a little bit of selling after we've had an extended run. We were looking at those positive extremes. So we had an expectation of where we would go, and obviously there's usually a little carry through. And in this particular case, there was a nice carry through, and you can see lots of new sell signs. Plenty of them. But at the same time, we also got some new buy signals from the 50K. We'll take a look at those in a second, which is always a nice juxtaposition. Now, we are in deep red, though, on that 50K, and we'll take a look at it in a moment after we look at the overall daily, which we could see developing from the move above immediately happened at the start of the day with the cyan above, and we talked about that, and then boom, pretty much came all the way to our last positive extreme low was 1953, and what did we dip below it? Just a fraction, 52.75. So we're going to love when that happens. Looks like we have potential of forming a cyan candle, which would be interesting because now we're actually seeing a positive move for steel, which we've been in this constant decay. So having that finally tilt up is critical in order to have turnaround potential. And we would now need to see a green turn pivot to the upside. I'll go ahead and put the 50K in here while I have the ES up. And so we get the nice dip below the red line, crossover. So the fact that we did move above the cyan with the green, positive, we will need to see that continuation on red. No way you're going to get a positive red pivot. The fact that green moved above its previous pivot was a good sign. And so the 50K took two new entries off the sell and new entry set up from there. So from that standpoint, no issues whatsoever. Let's look at our intraday. And it was pretty choppy. I mean, it started off pretty red going back from, you had the deep red right here. So low signal coming, you get the buy signals, but we were still within that red, and no breakout of the zone until we finally got a little bit higher. It still drifted lower on that, but it was indicating that there was still some strength building into it until finally it broke above its final peak and just could not hold it at all. And came back, retested the lows, and then it wasn't until we ended up with lower lows on this higher setup right here that we started to get our breakout and took advantage of that one, and it was a nice little run right there. Before the end of the day, went back into deep trend, but sparked out of it a little bit to where we're at right now. Came right back to it, and so kind of neutral. Would expect it to start picking up a little bit. You got to even out some of this. There was the exuberance, obviously, of having the positive extreme. We knew that was going to take place right as the holiday was happening, and then it usually evens out, and it's pretty typical of holiday experience, and that's fine. Everyone's getting back, looking at the situation, not sure where they're going. Now, there's a couple more positive setups here from the NQ got taken care of on that nice dip, so it clears that, and you can see very deep into the safety zone with that. So really not horrified by the potential of where it was going to go. This was our marker, and I think it provides new opportunities for those that may have missed the last pop. Opportunity to get in. You didn't get as deep a move on the YM, so not quite at the target range from the red dot that we had developed right over here that was looking for a retrace. Still has time. It's still within the cell configuration because it doesn't have the steel moving up like you see on the S&P and that. So you get the nice pickup from the extreme histogram. You would want to see that turn up with the steel. And flattening of the green is actually fairly positive for holding on to where things are at. USO still within its deep setup, though. We finally got pivot up of steel and of green, so that's an indication that we could see the beginning of a turn within that configuration, and then also puts in the bifractals, and this would be the one that looks most attractive, particularly if the green gets above the red, though you can still see solid decline in there, so you want to be cautious with it. TLT on its turnaround pivot. So this is where the one that first started the pivot was TLT right here, and it's continued that. I would expect to see that crossover needs to happen actually today, otherwise likely to get rejected on that. But met the target from the buy dots. Nothing special with that. Gold holding on fine because it's been in the safety zone. No surprise with that, and actually turns into a new buy cross with the green above cyan and rising. Got to watch that though. It's a pretty big move. We might even get overbought here pretty quick. So it's something to bear in mind. And the earliest spot of a new buy signal from the euro, and barely though. I mean, you're only seeing the slightest of tick ups. A nice movement on the extreme histogram like that. Steel moving in the right way. Need to see the green though cross the red to confirm it to the upside. But you get a couple. You got the cyan candle as well as an orange dot up target just shy of 136.7. So not too bad. X holding on well despite the fact that the steel dip across has been kind of holding it, but you've been solid with the cyan below red and white, and there's just been no change in that whatsoever. All we were looking for is potential positive extreme from this move there that took place the next day. Pretty much holding up fine. CLF, a little bit more weakness there as you had the cyan skyrocket up above. Began with the steel fading there. It took care of its positive extreme and then just continued a little bit. Though it's in the sell candle with that crossover of the DOC spread, you still have the red kind of rising. Right now it's at a precarious spot because as it starts to move lower here and doesn't get above the zero, you could potentially see a much larger retrace back to below the breakout point where it turned green. And GCP from the sell signal back up there. Been a nice decay, but looks like it's starting to produce the buy signal. We need to see that red get above the -7, but the potential is there in this particular configuration. Kind of held up right there on there, but I think intraday looks attractive to begin to think about potential entry. WLT, we talked about it retracing these positive extremes, coming right back to where it is, and if it isn't doing that beautifully, I don't know what else you could describe it. It started first thing in the morning with this breakout above, and that's when the price was all the way up here, well over 620, and then it just, nice move. Makes it easy when they cooperate like that. Apple, we really didn't have any concerns about that. We knew that there was potential retrace of positive extremes, did that, and actually bought back up within it. Nope, no issues with that chart whatsoever. It's just not a huge run. Amazon had given a little breakdown here where it started with the steel, and the cyan rising finally gave away a little bit more of that. Just retraced the positive extremes. It was just right there. So you can see it as it develops, and then it's just a question of, not getting caught in the wave as it takes place. Point them out as they start to develop, and then it's a question of, okay, are they going to hold the support of the ABMs or not? And at that point, you can flip over and switch to the opposite direction. It really becomes that straightforward. Likewise, these all have pretty much the same thing. FAS was another one where, if it wasn't moving in the right direction, that we didn't expect the market to hold up well. Facebook had been a sell for quite a while here, and no shock with the continuation. I know for some people it was, but it was an easy put buy. Google, likewise, been in a sell signal. It was held up decent, but this is what happens. They hold it for 2 or 3 days, and then it's just a severe breakdown. It was like, what happened? Well, we started with the steel moving below, and then you get a straight B line up with your cyan and positive extremes to retrace, and those are the ones that get hit. ECLN held up pretty decent despite the setup. It didn't have positive extremes, but it was pretty darn close with these setups. I was just looking for retrace coming back down to this particular point and the potential of deeper retrace to even here on a broader sell signal or market sell signal. It's not really in that space because we've been continuing to have rising red. Tesla broke through that expected retrace down to the 224. It had 203 all the way down there. We really wasn't looking for that to reach that particular point. It's now oversold. Was pretty decent within the safety zone here, but still aren't seeing a turnaround from green. So there could be some potential weakness still with that, but it looks attractive to start thinking about the potential turn on it. Likewise with Twitter. complete breakdown. Still in the safety zone, but again, until you get that green, making the slightest move. If you get steel above it, that could help. But with this strong a move for Cyan and that, it's going to take a little bit more time, and that's it. It just takes a little bit of patience on your part to not get over anxious and want to jump into these, or if you are going to play some of these long to the inside day using the 15-minute, you just have to be more responsive when you do get sell signals. You're going to have to take them and wait for the new buys that come in that will, eventually propel it when the turn actually takes place. And I know for some people that it's like, well, but that requires, maybe actually paying attention for more than just a couple of minutes and maybe making one or two trades in and out. And yeah, that's what it takes. You can hold on to it, but that's not always prudent. The reality is, if you want to be, successful with some of these, you have to pay attention to what's going on. Only when you're playing the longer, broader daily signals where you can provide the proper length of stop, which for most people is just way too large because they get panicked as price moves about that. And the reality is, if that's what scares you, that's why these guys win, because they know that they can swing that volatility and it doesn't impact them because they're in it for a much longer period than people who are just a little antsy. So just a food for thought. As always, though, continue to look for me on private Twitter feed, Stock Twits. It was kind of boring on that move the other day, but getting a little more activity now as people are coming back, and then there's going to be additional holiday stuff. So we'll go from there. Continue to trade well. We'll talk again tomorrow.